If you want to learn a powerful and effective trade during earnings season, then stick around for this video. The step-by-step method for how to spot and trade the setup will be revealed, and with a recent example from our trading desk and this earnings season. Get a peek into the trading done on a professional proprietary trading floor in New York City, ours, in this next video. Hi, I'm Mike Bellafiore, managing partner of SMB Capital, a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the playbook. Click our subscribe button right here so you don't miss any of our trading videos produced for the trading community. The earnings trade we will share in this video will help you improve your trading. It also possesses the benefits of it's simple. It's a simple trading setup to spot and understand. It's one of the first trades that we teach our new traders on our desk. It offers an outstanding risk-reward opportunity. It appears every day during earnings season and after any significant news is reported in a stock. You can trade it with different time frames. We're going to reveal this trade in detail next. So think about signing up for our next webinar that we're offering. There's 4 terrific setups that you can learn in this free webinar. Go ahead and click the sign up button for our free webinar right now. You're going to learn more in a couple of hours from this trading workshop, from what we've heard from the people who've attended, than from years of online education. Let's talk about a powerful trade for earnings season and beyond. We're going to give it the name, the second day play. A second day play is one of the first trades that we teach our prop traders here in New York City. It has an excellent risk reward. It's a powerful trade for after significant news. So this is a great trade for earnings season, and this is a great trade for after there's been significant news in a particular stock. It's simple. It's great. It's a great learning trade for developing and new traders. So even if you experiment with this trade and at the end of it you decide it's not for you, you placing these trades is going to give you an opportunity to learn so much about trading and markets while you're in the middle of it. There's no failing experience with a trade like this. There's just a learning experience. It's repeatable. So you're going to see this trade come up very often in markets. It's scalable. You can trade it big. You can trade it based on multiple time frames. So this is something that you can micro scalp, and this is something that you can turn into a longer term trade based off of these principles as used by successful prop traders globally. One of the traders that I work with internationally just talked about a great second day trade that he made that made his week. Trades a foreign market using principles that we taught here in the US, applying them to that foreign market, and really for him crushing it, and for really anybody else. This is a very, very large trader, even for anybody else, really using this powerful trade to profit very handsomely. Second day plays, you want to look for a significant news catalyst, something that's unusual and unexpected by the marketplace. You're going to have to find important technical levels. I'll show you one in the example with Twitter. Elevated RVOL, terrific to look for. RVOL is relative volume. So you want to look for something that's trading more volume on a given day than normal. You want VWAP in the direction of your trade. So if you're shorting it, you want the stock to be below VWAP. If you're getting long, you want the stock to be above VWAP generally. You want the tape confirming the trade. I had an interview today with a really smart guy from an investment bank, and he was asking me, what do I see as a commonality among successful traders? And one of the things that I'm very fortunate to have the opportunity for right now is that I get to work with a lot of seven-figure traders, both at our firm and outside of our firm. And so I do some mentoring with seven-figure traders outside of the firm. They will do a daily report card with me, and that's right now those are the traders that I'm working with on an individual basis. And it gives me the unique seat to see what these large active traders are doing. And these guys are in the US and they're outside of the US and they're trading different products. And the commonality amongst all of them is that they are looking for their setup inside of their playbook and they're waiting to see it. And by see it, I mean their thesis and their setup is being confirmed by the tape. They're making their best trades when the tape is confirming and showing them that there's edge in the trade that they're about to make. And that by sticking to the importance and listening to the tape, they're putting on some of their best trades. And again, these are traders at different firms. These are traders inside our firm. These are traders outside our firm. They're equity traders. This is across the board. And so I'm sharing with you what I am learning and sharing with these very, very large traders. You're going to create your rules for exit based on your time frame. So if you're going to scalp this, you're going to create your rules for exit. If you're going to swing this, you're going to create different rules for your time frame. Our trade outlook in this Twitter trade. Twitter reported earnings and beat EPS by 1 penny, beating revenue by $13.65 million. Twitter reacted negatively to earnings because their monthly average users, their MAUs, were expected to increase by 1 million, but rather declined by 1 million to 335 million due to the increase in account removals and suspensions to combat abuse. So what happened was in this earnings report, the monthly average users were lighter than expected. This is an example of how we measure the core of how a business is doing. So the most important thing for Twitter would be how many people are coming to their platform. And in this case, less people are coming to their platform. They're going to go out to their advertisers and they're going to say, you should pay us X because there are these amount of people who are on our platform. If they're less, then they're not going to be able to make as much ad revenue when they go out to their clients. Institutional ownership, 62%. ATR, $2.48. ARVL, 2.5 on this particular day, so elevated ARVL. You want to shy away from a second day trade if it's below 1. Market cap, a lot, but for those of us who own this long term in our personal accounts, hopefully got some ways to go. And what's interesting about that is I actually own this in my personal account, and this is a trade we actually made on the short side. So there was a divergence of what we're doing in our personal account and what we're doing in a trading account. All right. What is the outlook for this particular trade? What's the big picture in this trade? Well, market's been really strong, right? I don't need to tell you about that. Market is trending up and has a bid in it. In this case, we're looking at Qs as well, not just SPY. Qs that sold off on the open and close week, but still in a very strong uptrend. XLK opened at 71.80, sold off 1.5%. All the major indexes were weak throughout the day and closed near the bottom of their intradays. But again, so short-term weak, pulling in, but not a ton. Long-term, near highs. Hey, we're in a bull market. So what's interesting about this is that this was put together by one of the traders at our firm, and we were discussing it before this presentation, and he used XLK as an indicator for how he ought to attack Twitter. And I said to him, why don't we go back and do a second draft, because XLK is not as important as Facebook for an indicator for how Twitter might trade. And I want to explain that. So recently, Facebook had earnings, and as you can see, they revealed on its conference call that expectations for its growth rate were to drop by high single digits for the next couple of quarters. And so operating margins slipped. Raymond James, Piper Jaffray, Morgan Stanley, all lowering their Facebook price targets. So Facebook is disappointing the street with its growth going forward, and on the daily chart, dropped 20%. And so Facebook and Twitter are not the same company, but there's overlap in what they do. They have a platform and they sell advertising to reach out to their customers. So Facebook, just before this Twitter earnings, had dropped 20%. And so instead of looking at XLK, my suggestion was we should be looking at, and I was looking at this as well, we should be looking at Facebook as an indicator, along with how Twitter was trading, to help us make a more informed decision. All right, so daily chart, Facebook's up 20%. Important levels in Facebook after earnings, 175, very important level. That's where lots of volume was done right after earnings. That's where it came together. And then the lows, 173.20, 173.80. Those were low points on 2 different days for how Facebook traded. If Facebook got below 173.20, and in this case 173, and I was looking at Twitter, and Facebook traded below 173, I would use that as an indicator that my short was more likely to work. Because now another stock in a similar area, in the same space, in the social media space, in the social media advertising space, was selling off. And again, we're making short-term trades. I'm not suggesting that Twitter is going to be trading lower for the long term. I'm suggesting for a short-term basis, the most logical move would be to the downside in this particular setup that we're going to show you. Okay, Facebook very well could go back up to 200, but if it got below 173, the most likely direction next would be down. On the 1 minute, you can see on this particular day that it did trade below 173. And that gives us a better indication than our XLK ETF, and a smarter thing to be looking at as well as Twitter for how we might trade. All right, so Facebook's below that significant level on this particular day. SPY's near tops. SPY on the 1 minute is selling off. So on the short side, that's going to give us some ammunition. Qs on the daily pulling in. Qs on the daily holding below VWAP. That's going to give us a little bit more ammunition that the short's going to work. XLK on the daily sold off a little bit. On the 1 minute, holding below VWAP. So technology sector is a little bit is weaker on this intraday. But as I was saying before, the one trader instantly went to XLK, and I said to him, I like that you're thinking about what to use also besides the price action in Twitter. But if you take a look at the percentage of XLK that Twitter is, it's very small. It's 0.31%. So while I like you thinking of something else to look at, it's not really going to be as correlated as you had originally thought. Some might actually instinctively think that social, SOCL, would be the ETF most likely to move with Twitter, but that doesn't do a lot of volume. But the general principle is strong. let's go try and find an ETF that we can use as information to help us inform a better trade decision. All right, so Twitter on the daily chart, as you can see, in sympathy with Facebook, came in a little bit and then pulled in from 44 down to 34 and then to 32 as we're looking at on the daily. On our 5-minute chart, you can see that 34 was the big level from the day after earnings, and that was a tremendously important support level. You can see it bounce off of that multiple times, holding 34, holding 34, holding 34, holding 34, even into the close. So this is our important technical level that we're looking at. So when we talked about the variables for a second day trade, we want an important technical level to trade off of. We want a significant news catalyst. We have that in Twitter's earnings, which are lighter than expected. We've got this important technical level to trade off of, which is 34. We've got elevated R-vol, which is almost near 3. Now let's go take a look at the trade. And we've got this 34 level. 34 acted as support into the close the previous day. The first day after earnings, we call it day 1. So on day 1 after Twitter earnings, it could not trade below 34. If it trades below there the next day, the most likely direction could be down, particularly when that 34 holds up. We'll talk some more about that. And it continues to hold as support throughout the post and the pre-market. So day 1, 34 is the level, and then the post-market and the pre-market 34 is this level. This is a very significant technical level, just bouncing off of it multiple times. Great level to be trading off of. All right, so let's talk about the trade management. So you can see a little bit of a lower high is created as Twitter can't bounce back to above 34.50. You have a trade option to start anticipating the breakdown through 34 and add 1 lot on the opening stuff candle. You want to add 2 lots. You want to put on more risk as we get that break through 34. All right, so this is now below our key level. Couldn't get below there all day yesterday. Sector's a little bit weak. Gets below there today. Boom. You want to put on risk. Boom. We're below the level. You want to put on risk. Boom. We're below that level. Got to put on more risk. This is a good second day trade. Got a news catalyst. Got your R-vol. Got your level. You want to give this a run. You want to cover into moves that are not sustainable. So you can cover 1 lot into the weakness, the downside. And you can cover your second lot when Twitter breaks down to a new low and then starts looking for bounces to add back. So this trader in this case was looking for potential to bounce, looking for the volume to elevate and take some risk off the table. Now this trader is making a shorter term swing trade. You certainly could have swung this for, you can certainly make this into just a scalp. Just take the scalp down. All right, you can make this into an intermediate swing trade depending on how you want to trade. And then you can also just trade to hold this and wait for a more convincing move to the upside showing you that the down move is over, or a capitulation move to the downside with elevated volume, or an area where value buying comes into the marketplace. You could play it for a longer trade. In this case, we've got an opportunity to add back a second lot as a lower high is made, holding under 32.80. You can see right here, we're holding below a VWAP. We're holding under 32.80. Cover the second lot into 32 because it's a major support on the daily chart. Love the idea of going to look at a longer term daily support and seeing where the stock may stop. You can add back the second lot as another low high is made, holding under previous support of 32.20. Cover the second lot when the breakdown through 32 starts to base. And you can sell that final lot into an exaggerated down move. Look for the volume to increase. Look for the move to be exaggerated. Look for the volume to increase. And so you can turn this into, go back to my previous slide, you can scalp this, you can intermediate swing this, or as we're showing you on this slide, you can swing it more so and look for that low of day if you really feel confident about that, or a reason to exit. All right, always want to have a trade management slide to look to see how we can trade this better. What you learned. You learned an effective and powerful setup to use during earnings season. You learned an effective and powerful setup to use after important news is released in the stock. So this is not just a trade to use during earnings season, but if there's a significant news released in a particular stock and you can see a technical level formed on day one that's significant, you can also apply this second day technique to it. Learn how to structure a trade with an excellent risk reward. You learn how to think through a trade setup like a pro. We showed you how to start building your playbook, which is your trading business. I love this trade for all the learning that can be done by new and developing traders for second day trades. One of the first trades that we teach, very effective learning setup. Go ahead and click our subscribe button so you don't miss any of our trading videos produced for the trading community. So think about signing up for our next webinar that we're offering. There's 4 terrific setups that you can learn in this free webinar. Go ahead and click the sign up button for our free webinar right now. You're going to learn more in a couple of hours from this trading workshop, from what we've heard from the people who've attended, than from years of online education. Please add your feedback in the comment section below for what videos you'd like us to produce next and what you found helpful from any of these videos. From all of us at SMB, trade well.